Hi everyone, welcome back to Corporate Decoder, the place where we break down the biggest financial stories, and today we're looking at Eastern Bankshares and their recent merger news. It seems like a big step for them. So buckle up, because we're diving into a significant corporate move that could reshape the banking landscape in their region. Before we dive in, if you're getting value from these breakdowns, make sure you hit that subscribe button. Also, we've got a super acting Discord community where we discuss these filings in real time. Link is in the description. Alright, today we're looking at an 8K filing from Eastern Bankshares. Now, an 8K is like a company's announcement of major events that shareholders really need to know about. And this one talks about a big merger. Basically, Eastern Bankshares is merging with Harbour One Bancorp. Think of it like two companies joining forces to become one bigger and hopefully stronger entity. On August 20th, 2025, Harbour One shareholders gave the thumbs up to this deal. This is a really crucial step because without shareholder approval, these big mergers usually can't happen. It also mentions that Harbour One shareholders voted on the compensation that would be paid to their top executives related to this merger, so that's also a topic that comes up in these kinds of deals. Now, the plan is for Harbour One to merge into Eastern, and then right after that, Harbour One Bank will merge into Eastern Bank. They decided to do this all at pretty much the same time, right after the first merger is finalized. This means that customers and employees of both banks should see a smoother transition as they're aiming to combine everything quickly. Eastern is expecting this whole merger process to wrap up in the fourth quarter of 2025. But here's a little wrinkle. If all the conditions aren't met by October 31st of 2025, they have the option to push the closing date back to February 20th, 2026. This backup date is actually the day before they plan to switch Harbour One's computer systems over to Eastern's systems. This is a super important technical step in bank mergers, making sure all the customer accounts and information move over correctly. What needs to happen for this merger to be finalized? Well, they still need approvals from several important banking regulators. We're talking about the Board of Governors of the Federal Reserve System, the Federal Deposit Insurance Corporation, the Massachusetts Commissioner of Banks, and likely others. Getting these approvals without any burdensome conditions attached is key. A burdensome condition could be something like being forced to sell off valuable branches or business lines, which could make the deal less attractive. Now, it's important to understand that even with shareholder approval, no merger is guaranteed. Eastern itself is saying they can't promise that all these approvals will come through, or when they will get them, or if they'll have to accept unfavorable terms. They're also flagging the possibility of lawsuits challenging the approvals. Despite those warnings, Eastern seems optimistic. They currently expect everything to be finalized and for the mergers to become effective on November 1st, 2025. This means that the day after Halloween, we could see these two banking institutions officially become one. The conversion of customer accounts is a big deal. They're planning to do this conversion around February 21st, 2025. So there will be a lot of communication to Harbour One customers leading up to that date, informing them about how their accounts will change. Now let's talk about what the shareholders of Harbour One get in return for their company. It's a mix of cash and stock. Each share of Harbour One common stock will be converted into either 0.765 shares of Eastern stock or $12.00 in cash, or a $0 in cash and both. The shareholders get to choose which they prefer. However, there's a catch called proration. What this means is that not everyone who wants cash will get cash, and not everyone who wants stock will get stock. They've set limits. Between 75% and 85% of Harbour One's shares will receive the stock portion of the deal, and the rest will get cash. This is to balance the total number of Eastern shares issued and the cash paid out. So your choice might get adjusted depending on what everyone else chooses. If everything stays on track for an October 31st closing, we can expect more details on how Harbour One shareholders can make their cash or stock elections by late September. You'll get a form to fill out and you'll need to decide what you want for your shares before a specific deadline. Now, like most of these filings, they include a section on forward-looking statements. This is basically their way of saying that while they're giving their best estimates about the future, things could change. They use words like may, will, potential, and expect a lot. This is important because it means the information about closing dates, regulatory approvals, and the exact timing of events isn't set in stone. They're basically telling you to be cautious about relying too heavily on these future predictions. They also list out specific risks. These include that the expected benefits of the merger, like cost savings or increased revenue, might not happen as planned or might cost more to achieve. They also mentioned that the merger might not be completed on time or at all. They're also very upfront about the uncertainty around getting regulatory approvals and meeting other closing conditions. On top of that, they highlight risks like customer reactions to the merger, general banking industry challenges, changes in interest rates, loan quality issues, and competition. Plus, the whole process can distract management from their regular business. Finally, the report is signed off by R. David Rosato, who is the Chief Financial Officer. This shows that the company's leadership is aware of and responsible for the information being reported. Now let's look at the broader picture here. Eastern Bankshares merging with Harbour One Bancorp is a significant move in the regional banking sector. The goal is usually to achieve economies of scale, meaning becoming more efficient by spreading costs over a larger operation. They're hoping for synergies, which are cost savings or revenue increases that come from joining forces. For instance, they might be able to reduce overlapping administrative costs like IT or HR, or combine their marketing efforts. The timing of this merger is key, and the fact that they're pushing for a simultaneous bank merger right after the holding company merger suggests they want to integrate operations quickly. This can reduce the period of uncertainty for customers and employees. However, the biggest hurdles are always regulatory approvals and making sure the integration is smooth. If they get bogged down by approvals or have a messy system conversion, it can hurt customer loyalty and create operations quickly. This can reduce the period of uncertainty for customers and employees. However, the biggest hurdles are always regulatory approvals and making sure the integration is smooth. If they get bogged down by approvals, alright, that's our breakdown of Eastern Bankshares' latest filing. What are your thoughts on this merger? Do you think it's a good move for Eastern and Harbour One? Let us know in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives into corporate finance. Don't forget to join our Discord community. The link is in the description. We'd love to have you there. Thanks for watching, and we'll see you in the next one, Tef.